Hello, everyone. Hopefully, you're having a good day. My name's Andy. My channel is Finding Value. I was scrolling through the comment section. It says, Andy, do you think you could have spotted the bubble in the housing market in 2007? Like a Michael Burry type thing? Yes. And so can everyone else on the channel. I'll show you how to spot bubbles. And we'll go over a couple bubbles that we're in today and give you my financial opinion. And just because you spot a bubble doesn't mean that you're going to get your timing 100% correct. The timing is probably one of the hardest things, but you know it's in a bubble. So you know it's a bubble. Doesn't mean it won't stop going up, and it doesn't mean that it'll just crash just because it hits bubble valuations. So here we go. I'll show you through together a presentation for everyone. You lose me. Here we go. This is the number of months of inventory for, I just chose a regular city, Ballard, Seattle, from 2005 to 2017. And it's like this everywhere. Now, Ballard would have been a little bit more difficult to see because the months of inventory never really went way up for Ballard, Seattle. So the bubble popped in 07 and prices really started to hit in late 08, but the inventory in 07 rocketed higher before the market crashed in later of 08, in 08, 09. So this one would have been a little bit harder. I grabbed one that was a little bit harder. Now, looking at kind of the overall, this is the overall US homes foreclosed for the entire area. You can tell there was a problem because the number of homes in foreclosure went skyrocketing from 2006 onward. And this is number of homes foreclosed, which is many homes. So it went vertical in 2007, signaling that there was a problem. The crash didn't happen till 08, later 08. So the US homes foreclosed, you would have seen it if you were paying attention for the number of foreclosures. Here is the overall month's supply of homes for sale. It went rocketing higher from 06 onward, signaling that you had a problem. Anything over 10 months, you have a massive problem. Well, we hit that very quickly. You can see the homes, months of supply of homes coming on up. And in 08 is where it crashed, was over here. So we saw this before the crash with the months of supply and foreclosures. It was clear as day. And one thing I want to talk about here is today, look at where the months of inventory is. It's never been this low. And there's the disconnect. In late 08, like in here, that's where the housing market crashed. And we had 22, 23 months of inventory. That's crazy. And then now people are calling for a crash, but you have no inventory. You have the most bullish active listings counts ever. Here's the housing inventory active listing count in the United States. This is homes that could potentially be purchased. Back in 2017, which was a seller's market even back here, we had 1.6 million homes, roughly. And this is the seasonality throughout. So we've got this nice seasonality coming through, and then we went all the way down to 600,000. That's nothing. I don't know how we could be in a bubble with no inventory. That's like saying, I think car prices are going to go down, but no one has any cars to sell. It doesn't make any sense, the people who think we're in a bubble, at least at this particular time. The inventory has to go up for us to be in problem land. Now, let's look at some bubbles. The Wilshire 5000 to GDP ratio. This is in total bubble land. It's in massive bubble land. Stocks are in a bubble. It's undeniable. What caused the bubble? Low interest rates. Low interest rates and a bunch of printing of money, which basically guided all the money towards stocks. Here's the S&P 500 price to earnings ratio. Anything in the red, bubble. 2000, just after 2000, 2001, total bubble. 2008, 2009, bubble. Bubble in 2021. We're in bubble land. I would not be there. Stocks to real estate ratio. Stocks have never been priced as expensive as they are in relationship to real estate. Stocks are in a bubble. They're in a bubble against every single asset that I can pull up. And this is saying that real estate is actually a good spot to be in relationship to stocks. Emerging versus developed markets. Doesn't look too bad for emerging, but keep in mind, developed markets are in massive bubble land. Dow to gold ratio. Bubble. .com bubble was at 40. We're at like 20 something. We're as high as the boom from 1929 and about the same as the 60s and 70s. Bubble land for stocks. Real estate to gold ratio. This is actually, so gold is cheap to the Dow and real estate is cheap to gold. Real estate is actually cheap when looking at asset versus asset. So real estate is actually a good buy right now, according to ratios that people should be looking at. So all these guys that think real estate's in a bubble, if you look at it from the perspective of asset versus asset, real estate's actually a really good purchase. They have it wrong. I have confidence that they have it wrong because all the data tells me it. M2 money supply growth versus inflation. They've printed a lot of money here and it's gotten into the system. I have a feeling that we could see this ramp higher in inflation, that is. The risk is that we could have a very high inflation rate, which we already are getting. Real interest rates are, this blue line is the lowest, one of the lowest times in history. Gold should be flying higher, and I'm taking the stance that gold will go higher eventually. Gold is underpriced. If gold's underpriced, real estate's underpriced. Stocks to commodities ratio. Stocks have never been this expensive in relationship to commodities. Once we get an inflationary period and people basically recognize that, commodities will go flying higher, in my opinion. And interest rates will start going up. They think it's transitory at the moment, and I don't. So that's for bubbles. Stocks are in a bubble. Undeniably. Big time bubble. All the data suggests that. It suggests that real estate's underpriced. And people who just look at price and compare it to history, I hate to tell you, if we're at 2006 real estate prices, we've had a bunch of inflation in between that, a whole bunch, which means that real estate's underpriced, in my opinion. And I know that goes against everyone else, but when you start pricing assets against assets, real estate's incredibly cheap and has never been this cheap in relationship to stocks. All the money they printed went into stocks and bonds. When that all rotates out, eventually, when interest rates go up and that real negative rate stays low, it's going to come flooding back to other assets, which I think will be commodities and precious metals and real estate. Real estate's going to go higher, precious metals are going to go higher, and commodities during an inflationary environment with increasing interest rates. Another bubble, cryptocurrencies. I think that's a bubble. Why do I think it's a bubble? They have no value. All it is a bunch of people and money flows going into it. It's the greater fool theory. There's no value. We don't use it for anything. And I don't foresee us using it in the future. So the best thing to do is to not participate in it. That's what I'm doing. Just walk away. If you can't value it, it has no value. We don't use it for transactions. It's not private. It's not anything that I would want to be in. Therefore, I don't want to be in it. And now it's just more money has to continue to come in to push it higher. When that money flows out, that's when problems will happen. But there's nothing signaling that you're getting a good deal. So, therefore, I'm going to propose it's a bubble. All of them. So that's how you identify it. The last housing market was easy to identify. It was just months of inventory, way through, through the roof, and foreclosures were going up. Plus, if you looked at the data in terms of loans that were underwater, there was a whole bunch. That eventually came in 2008, which means it was a problem for a little while. The current situation in housing, it's complete opposite. We don't have any inventory. This is a supply-demand problem. And if you look at the loans going in, they're all in the positive. Everyone has equity in their house because house prices have been going up. And the credit scores is very high for a lot of these people getting loans, and we don't have that loan problem. That's my opinion. So I don't see a bubble. I see a market that is out of whack. We're gonna have to build our way out of it. We have 3.8 million home deficit, which means that we're gonna have to build a lot more homes. The bubbles in stocks. We will have a dot-com crash, similar. When? Could be 6 months, year, 2 years out. It's in a bubble though, and my money is not there. If you guys have any more questions, put it in the comment section. Let me know what you have. I appreciate you guys leaving comments. Thanks for the comments. Give me a thumbs up for the content. And thank you for listening. This is Finding Value.